Another key point of debate in the markets right now is China, with many investors hoping that China could be a key source of demand. Hugh Hendry, though, doesn't buy into it, so I asked him why.
If this issuance of bonds and this fear of bond issuance is the bogeyman, China's very much Santa Claus. China is bestowing, has the prospect of bestowing all of us gifts and the gift of a great escape. And I dramatically want to take that on. China, I believe, and the Asian surplus countries are the most exposed and the most vulnerable in this whole episode. And whilst that sounds fanciful, that, of course, I can point to the even more dramatic correction in their trade statistics, in their stock market, etc. And the flaw that they have is that they've swapped a dependency on foreign capital for a dependency on foreign demand. Okay? So there's no change, as I see it, between 1998 and today. Secondly, I believe that this presence of leveraging by households in the corporate sector, where we took leverage to like 4 times the GDP income of the country. What we were doing is we were overstating the size of America by bringing future consumption and spending it today. Okay, so it's almost as if Bernie Madoff were responsible for the accounting of GDP, and if he'd been responsible, he would have overstated it. Yeah? Now, I think China looks like an investor in a Madoff fund. He bought into an NAV which was fictitious. Now, if you go back to 1989 in Tokyo, at the height of the bubble, and you looked at the projection of nominal GDP moving forward, it was a continuation of 5 or 6% per annum in perpetuity. The reality, however, owing to the post-bubble difficulty, is that nominal GDP expanded at 1% per annum, and it created an enormous surplus capacity, which has destroyed the profits of the corporate sector and everything else within Japan. Now, that's my fear. My fear is that China and its contemporaries have built productive capacity not only to service a $14 trillion US economy, but to service an economy in America which they believed would be $20 trillion in 7 years' time. My fear is it could be closer to $15 trillion. So I see China today as a deep, out-of-the-money call option on America. Yeah? China only has a chance of succeeding if the American economy proves to be vigorous and bounces back, and I don't see the prospects of that happening, certainly imminently.
Well, what about another issue which is of tremendous interest to many China watchers right now, which is gold, and this idea that the Chinese may lose faith in the US dollar and start buying lots of gold or even more gold, and that one of the few safe hedges right now against this tumultuous storm is gold. I mean, you've been one of the few voices saying actually gold is not all it's cracked up to be.
Well, and I say that as a dear friend of gold. I made 50%. I don't say that as an advertisement, but I made 50% in tremendously demanding situation in 2003 from gold. And it was tremendously demanding because every time I opened the Financial Times or The Economist, the pages leapt out at me and said that I was an idiot, that gold was a barbarous relic, to quote Keynes, and that it had been falling for the best part of 30 years. And it was only old men in raincoats that entertained fantasies regarding gold. Okay, so I say it with some form and with some form of being on side of gold. But my point to you is, gold today is no higher than it was in March 2008. Now that's a heck of a long time for me. And over that period, we've had unprecedented events. We've had quantitative easing. They are physically printing money. It's a bailout nation. Losers are propped up. General Motors, Chrysler, etc. And yet gold is no higher. Yeah? And my only take on, and again, when I read the fabled pages, the fabled pink pages, they now are telling me that I should be buying gold. And if I own gold, they're congratulating me that not only am I making money, but of course I have this great wisdom and insight into monetary policy and the fears of inflation. So that's not an environment that I recognize from successful speculation. What it tells me is that a safe haven loses its safety when it's too popular, when it's too obvious and it's easy to articulate. Okay, I swing the other side.